Good afternoon, everyone. Welcome to another NITYA's Roundup for the month of June 2022. This is going to be an interesting roundup since we are dealing with few important things in terms of litigation scape, in terms of Supreme Court judgment, and we have a lot of other judgment to be discussed. Today, we'll touch upon recent changes under the GST law, recent news under GST, key rulings laid down by Supreme Court in case of Mohit Minerals and employee secondment ruling, some other important rulings, summary, and then we will have live Q&A session. Today I am accompanied by my colleague Sourabh. I'll be taking first three parts and the remaining part will be taken care by Sourabh. So let's begin this session with the recent changes. So in last few months, there has been a lot of investigation, inspection, audits by the department, and in lot many cases we have seen that there are spot recoveries that's being done. Industry as large has represented this matter to the government, and the only pain point they have discussed is that things are becoming very tricky. The officers are not following the proper method, that is issuance of audit memo, show cause, and then appeal remedy. Rather, there is a courseful recovery from the taxpayer. So in this context, the government issued a clarification via an instruction. They've said that it would be a voluntary for a taxpayer to choose either to pay tax liability before issuance of show cause notice or not. They have instructed to the field formation officers that they should not make any recovery during inspection, search, and investigation. They have also said that wherever there are spot recoveries made during those inspections, the disciplinary actions will be taken against those officers. So, from an intent perspective, it's a clear guidelines from the government that they wanted a clear method which is laid down in law for recovery. But in reality, we have seen that a lot of time this instruction is not being followed, even still not being followed after its issuance, and people are facing real trouble in dealing with these investigations. Let's see how, in reality, this instruction is being implemented at ground level. Under the recent news, the government is considering the GST Council meeting, which will happen in the month of June. There was a discussion that there would be a rate tweaking in the council meeting, but this time they have clarified that they'll not take up the rate tweaking part in the upcoming GST Council meeting. Government has proposed that e-art auction might face 12% GST on price differentiation. The UP government came up with a policy where they have allowed women to work in night shift after their consent. This will have some consequential impact under GST as under the provisions of Section 17(5). There are certain credits which is available only if those are statutorily mandatory required under any law, like credit on food, beverages, etc. So if this is a mandatory thing which is being laid down by law, then at least in the fact to the extent of factory consumptions, the option to avail credit can be explored. GST Council is likely to make some tweaking in the form to check the claims of fake ITC. Bitcoin has been a talk of town for last an year. We have seen some changes in Income Tax Act. In parallel, GST Council is also considering to levy 28% tax on bitcoins and other cryptocurrency. We'll now deal with the key rulings. The first ruling, before that, we conducted a small poll where we asked the audience whether the Supreme Court ruling on ocean freight impact your businesses. The answer is yes by the majority of the participant. Yes, in some shape or the other, this judgment has an impact on their businesses. Let's see what is this judgment. So the issue was in case of CIF imports, there was a deemed law under GST which demanded uh, tax under reverse charge by the importer. In this situation, the actual shipping contract, the actual freight contract was between the foreign supplier and foreign recipient. So there was a debate whether there is actually an import of service or not, and should the GST actually be paid under the GST law in India. So this matter traveled to Supreme Court. Supreme Court clarified that yes, in some shape, importer uh, is a recipient. It says that importer is recipient since the place of supply in terms of relevant GST provision is in India. They have discussed one technical point where they have said that under 5.4, the source to power to notify importer is available. They have held that there is a sufficient territorial nexus when imports are made in India. They have also held that whatever are the recommendations of GST Council, those are not binding on the states and central. They have discussed the concept of composite supply, and they have held that if a GST is being levied on the service portion in case of CIF contract, then it will violate the concept of composite supply under Section 8. On the ground of dual levy, and at the end, the Supreme Court held that this levy is unconstitutional. So no GST needs to be paid on CIF imports. Now, what is our take? In our view, Section 5.3 should be read strictly. The Supreme Court has said that it is covered under Section 5.4, but in our view, Section 5.4 does not expand the scope of recipient. There can only be one recipient, which is actually the foreign supplier. Also, the transaction is a single supply, not a composite supply. So, to that extent, the finding of Supreme Court is not good. This will also have an impact on the matters which are pending under service tax, because the government with the revenue will or the taxpayer will try to use this judgment to build up their case. What is the way forward since the levy is considered to be an unconstitutional? So till the time we have a time limit for issuance of credit note, wherever taxpayer has paid GST under reverse charge, they can consider issuing credit note to that extent. And for the past period, they can consider filing the refund. The general period of refund is 2 years under the GST, but there is another debate whether this is when the levy is considered as unconstitutional. Can the normal limitation period of 3 years under limitation law should apply, or the period of 2 year will apply? So it depends on the interpretation, but that's also one of the area which needs to be looked upon. For future, taxpayer can stop paying GST basis this favorable ruling. There is also a possibility that some retrospective amendment may happen under the GST law after the Supreme Court judgment, since government has levied reverse charge on CIF contract under service tax and under GST as well. So they might want to continue with this concept, and they might bring a retrospective amendment in the law. Now, there is another important ruling pronounced by Supreme Court on the same day in case of Northern Operating System. This deals with the employee secondment concept. So, in this scenario, there was a seconded employee in India which was on the foreign entity payroll for the continuation of social security and retirement benefit. Indian entity was employing the employee for all practical purpose, and they also issued an employment letter to the seconded employee. Foreign company was remunerating employee salary, bonus, social benefit, and other expenses. An Indian entity was reversing all these expenses to foreign company without a markup. The terms of the contract said that employment with foreign entity will cease during the period when it is with India, and the terms and conditions of employment contract in India will be enforced to the extent the employee is operating in India. The role of foreign entity was restricted to payroll service provider only. Now, what is the observation of Supreme Court? Now, Supreme Court started with the theory of the substance over form. They said that direction and control test, which the Indian company is doing, is irrelevant. It is not the single determinative factor to decide whether there is an employer-employee relationship or there is import of service via manpower contract between the foreign company and the Indian company. The Supreme Court said that Indian entity has operational and functional control that is only for the purpose of performance of tasks given to the employee. At the end of the secondment period, the employee returns to the foreign entity and his employment then continues with the foreign entity. They challenge the existence of Indian entity. It says that it's a quick quid pro quo between Indian entity and foreign entity, as Indian entity gets the benefit of expert knowledge of the employee. At the end, the Supreme Court has held that it is not the employer-employee relationship between Indian company and the seconded employee. It is a service between Indian entity and foreign entity, where foreign entity is providing services to Indian entity via an secondment of an employee. This has shaken the earlier favorable decisions in case of Volkswagen and Computer Science Corporation. They have said that these are irrelevant to decide this judgment. So Supreme Court concluded service tax is leviable under reverse charge as foreign entity is providing manpower supply services to Indian entity. The taxpayer also argued that the matter is revenue neutral, but on that point, Supreme Court said that this argument is irrelevant because if we get into this theory, then all the reverse charge transactions can be put under non-compliance and everybody will start taking shelter under the revenue neutrality theory. Since the matter involved interpretation of law, Supreme Court agreed that extended period of limitation is not applicable in this case. We conducted a poll on this question as well, whether this ruling has a bearing on the existing contract between the companies. The answer is yes, because it is very common between Indian company and multinational company where it has overseas companies that there are a lot of employees seconded in India. So this decision under service tax is equally applicable under GST because the taxing entries are very similar. Most importantly, it will also have an impact on the income tax positions adopted at the moment, since this seconded employee was treated as employee. So all the compliances from FEMA, RBI and income tax was done considering this to be an Indian employee. The moment we consider this to be an import of services, then all these positions needs a relook. Now, what is the way forward? In our view, this judgment is very fact specific. It can still be distinguished even today depending upon the terms of the agreement of the secondment contract. So, which means every secondment contract may not be affected by this judgment. We have to look into the facts of each secondment contract and then understand to what extent this judgment impacts this secondment contract. On few grounds, in our view, this judgment is incorrect. It is incorrect to say that Indian company controls and compliance as employer. This judgment fails to consider the concept of dual and joint employment. Even the department has recognized this concept in the past. They also issued a draft circular under service tax law where they have considered this a joint employment concept and said that if this is the case of joint employment, then it is a case of employer-employee relationship. Revenue neutrality was one of the important points which should have been considered. Extended period is not invocable. That is the correct proposition that's been laid down by Supreme Court. And technically, in our view, service tax was not leviable in the present case since it was a clear-cut case of employer-employee relationship between the Indian entity and the seconded employee. Now, it is possible that since this judgment has a very wide implication for an industry, in the past, the government has issued circulars and instructions on those issues which has a wider implication, like after the decision of Ultratech on GTA services credit, after the Westinghouse judgment on the classifications of auto component parts. So we can expect a similar circular or instructions from the government on the point of this judgment and how to treat the secondment of an employee from a GST standpoint. What is the way forward? Under service tax, since most of the period is time but only 3 months are being left, so that is the period which can be, if there are open notices already between the department and taxpayer, then only for these 3 months there could be a possible demand. Matter is relevant under GST, so the all the employment contracts, secondment contracts needs to be reanalyzed to decide the GST liability under reverse charge. There is another point which needs to be considered. A, should we consider paying GST under protest for the past period and claim credit to avoid any litigation from the department? If yes, then what should be the value adopted for this transaction? So this also needs a deliberate consideration. For future, to avoid the potential dispute, wherever credit is available, the taxpayer can consider paying GST under reverse charge and claim credit. Also, the taxpayer via some industry forum can consider filing a representation before the CBIC, seeking a clarification, since this judgment can open a Pandora box for the past period as well as the future period. And in parallel, the impact of this judgment under income tax law also needs to be analyzed. So with this, I hand over this session to my colleague Sourabh, who will take it forward.
Thanks, Gaurav, for explaining these two important rulings from Supreme Court. Besides these two rulings, we have other rulings as well, where the various courts have dealt upon and have laid down various principles which are relevant for future transactions as well. Starting with one of the very debatable issues relating to payment of tax by supplier as a precondition to claim credit, Calcutta High Court has come up again with a judgment in the case of Sanchita Kundu. In this case, the issue was that the suppliers' registrations were cancelled retrospectively, and therefore the department sought to deny the GST or deny the ITC at the hands of the buyer. In this case, the transactions were supported by genuine documents. All the payments were made through banking channels. And when the transactions were made, these registrations were active. In that context, the court has remanded back the matter with direction that if everything is found to be genuine, benefit of ITC is to be extended to the bona fide petitioner. Now, similar rulings have already come in past. As I was saying, in Calcutta High Court only, there was a ruling of LGW Industries where similar position was held. Further, in case of DY Bithal by Madras High Court as well, the court remanded back the matter and asked the revenue to examine whether suppliers the transaction has been genuine or not, and whether the buyer has been a bona fide buyer at all or not. Now, this issue has a lot of repercussions. In past 2-3 years, the department has been very aggressive on claiming these ITC back from the buyers itself, and they are pressurizing buyers onto reverse all these ITCs that have been claimed in the past period. Moving on, we have another judgment of Vedanta Limited. This relates to refund of IGST which was paid on exports. There was additional IGST also which was paid later because of the variation in rates in London Metal Exchange, and that led to a payment of tax twice, one for the real IGST transaction or the real value, and second for the variation in rates that had occurred. And then department rejected the refund claim on the basis that the system does not enable any refund like on account of variations, as also that manual refunds are not permissible. In that context, the department relied upon previous judgment of Gujarat High Court in Amit Cotton Industries, and they directed to process the refund and also directed that similar contingencies shall always be figured out and shall always be taken care of by the department, even if the refunds are being filed only online. These scenarios should be taken care of in exceptional circumstances. Moving on, we have another judgment of Nikunjam Constructions of Kerala High Court of Service Tax. In this case, the petitioner challenged this SCN because it was not there was no pre-notice consultation issued in this case. Department contended that it is only directory in nature and not a statutory requirement to conduct this pre-notice consultation. The court held that pre-notice consultation is a mandatory process and reiterated that circulars issued by department are binding in nature. So there are multiple circulars on similar points which basically laid down the proposition that pre-notice consultation is mandatory, particularly in cases which involves fraud, suppression of acts as well. And therefore the SCN was set aside and liberty was granted to department to issue pre notice consultation as well as SCN on the same subject matter. Moving on, we have another ruling of Gulati Enterprises. In this case, the petitioner again challenged the SCN, which was issued without pre-notice consultation procedure being followed. Department contended that taxpayer had tendered voluntary statement that they would require to pay the amount, or rather they had voluntarily committed as to payment of the amount as well. And therefore, they had denied the pre-notice consultation. In this case, the department also took a position that prior to 15/10/2020, the provision which was used or the terminology which was used in the provision was shall, and thereafter it was specifically made as may, and therefore it has no more remained a mandatory process, and therefore pre-notice consultation will not be fatal to their case. However, the court held that voluntary statement cannot substitute a statutory notice, and therefore the SCN was set aside with liberty to initiate fresh proceedings by the department. Moving on, we have the ruling of ABI Technologies of Madras High Court. In this case, petitioner had inadvertently reported exports as taxable supplies instead of zero-rated supplies in GST 3B. And due to this wrong reporting, the refund of the petitioners were denied, which was challenged before the Madras High Court. The Madras High Court took a view that Rule 96 of the CGST rules cannot be strictly applied to deny legitimate export incentive to exporters, in the sense that when the exports have been physically made and practically for all purposes all the documentations are ready and they have been taken care of, then merely reporting wrongly in the GST 3B shall not lead to denial of a substantive benefit as such. And the directions were given to procure export data and grant refund of the tax paid on valid exports. Moving on, we have the very important case of Munjal Manish Bhai Bhatt versus Union of India in Gujarat High Court. In this case, the challenge was made to the deeming fiction of 1/3 deduction of value of land from total consideration on which GST was payable. And this valuation mechanism was issued through a notification. Therefore, this notification was only subject to challenge as being ultra-vires of the provisions of the law itself. In this case, the development contract provided for a separate consideration towards sale of land and construction services. The court held that Schedule 3 of CGST Act excludes any sale of land from GST, whether developed or not. Further, deeming fiction can be applied only where actual value is not ascertainable and should not be contrary to statute. So in this case, since actual value of land was available with the taxpayer, therefore this concept of 1/3 notional value should not be applied in these cases, and therefore the provision or the notification was read down to mean that it will be an optional it will be optional in the hands of taxpayers to really adopt the mechanism on the basis of 1/3 value of land or the actual value of land as they may feel right, or wherever the values are available. So this is how it has been interpreted. One of the important highlights of the Gujarat High Court judgment is that the taxpayer had argued that the provision, the valuation mechanism cannot be provided through a notification, which concept was later diluted by the judgment of the Mohit Minerals, which Gaurav dealt earlier. This is one of the interesting cases in service tax regime. There was a final order passed by Settlement Commission imposing tax liability, interest, and penalty on the ground that the liability and the reverse charge was paid by taxpayers in 50-50 ratio, contrary to the law that provided for a ratio of 75-25. The court held that as tax has reached the exchequer in entirety, short payment cannot be alleged, and therefore dual payment cannot be taken from the taxpayers as such. This is one of the few rulings, or in fact one of the rulings on this subject matter. This is the first time the courts have gone into to allow the benefit to the taxpayers when the taxes have already been paid in whatever ratio that may be. Another case, and very important here to highlight, is that summons were issued to managing director of the company instead of its authorized representative. There was no evidence that the company was not cooperating or presence of managing director was actually required. In that scenario, the court struck down the summons. They said that senior personnel cannot be summoned on a regular basis. They directed to issue a modified summons, and this was also the court relied upon the instructions issued by CBIC in 1987, where it said that it should not be a regular process to call for a senior officer or a person like managing director of the company on a regular basis. And therefore, this ruling will extend a lot of benefits, because the department has been aggressively issuing summons and have diluted the concept of summons in all senses. So this is the last ruling. Happy to share that this was argued by NITYA Tax Associates itself in the case of Ericsson India Private Limited. In this case, the payment of customs duty was paid twice because there was an error on the portal. On the first day, the entire duty was paid, which did not reflect on the ICS portal. On the very next day, this duty was paid again through another bank account, and therefore thereafter a refund claim was filed belatedly after passing of 1 year. In that case, it was held that bar of time limitation of 1 year shall not apply for any excess amount that was paid, and that cannot be called as duty as such. So this lays down an important principle that even if I would have assessed the tax as duty, then also if it is excess payment and has been paid by mistake of law or fact, then in such scenarios, the time limit of 1 year shall not apply, because the amount that would be deposited would not qualify as duty as such. So that's all from our side. We'll just move on to the synopsis of the case, synopsis of the entire roundup that we have gone through. The first one being that no recovery has to be made by tax officers during the course of inspection. This is one important instruction, but as you would have heard in the case that Century Ply that I was just discussing, even after such instructions, the government or the department GST officials have been pressing for recovery, specifically TGGI, during the course of investigation in only. IGST is not payable by Indian importer on ocean freight services, and this comes as a huge sigh of relief for taxpayers, being one of the favorable judgments by Supreme Court under GST regime. Again, the service tax is not payable on secondment of employee arrangement, as was discussed earlier. ITC of bona fide purchaser cannot be denied for undertaking genuine transactions, even if these registrations have been cancelled retrospectively, because during the relevant period when the buyer was transacting with the supplier, it had all bona fide belief that and would have taken care and would have undertaken the due diligence involved. Then refund to be granted for tax paid on genuine exports, even if the same is not being reflected in the GST system. Issuing pre-notice consultation is mandatory, specifically prior to 15th October 2020. Infraction in procedural rules cannot deny exporters the substantive benefit of refund. For example, in this case, which we discussed, the infraction happened because in GST R3B, the taxpayer did not show it as a tax or non-zero rated supply, rather it was showing it as taxable supplies. Deeming fiction of 1/3 value, the concept has been read down. It becomes optional at the hands of the taxpayer to adopt any value. Summons cannot be issued directly to managing director without any specific reasons.
Thank you for joining this webinar. We will soon be available to you in the next webinar. Thank you.